Hi traders, how's everyone doing? I'm going to start off by reviewing where I left you. That was on last Wednesday prior to the PPI. The call was to sell the yen into the gap on a hot PPI. That's exactly what happened. I had sales off at 47.60. Didn't turn out to be anything big, just a day trade or scalp as the market held the 147 level. The other idea was to fade a hike in the euro. We really never got much of a rally on the interest rate hike by the ECB. Euro continues to move lower, and it was about selling rips in the S&Ps. I was talking about 4,500. It extended over this 4,500 to 4,520, and really a big failure on Friday. I'm going to get to some of the individual issues behind this breakdown, and you look at it on a weekly. It's really quite interesting that all week we had all these different data points, and the whole week was made on Friday after option expiration, with the S&Ps just really failing and now trying to hold. I say that this market's very vulnerable. You have a good stop loss point over 45.20, and I would sell any Fed induced bounce, back towards 480 or so. Do your fib work, but I think the highs are in. I'm wrong over this high, but I'm looking for 4,200. I wouldn't be surprised if we're there in fairly short order. I'll get to individual issues. Tech's really leading the way down. I just want to get to some of the currencies. So here, Euro's up about 9 pips. We are holding the 38% back level. So, it's possible to have some type of rally back to 108, 109 before we finish. But this 38% level is not my final target for this correction. I'm looking for a minimum of 102, which is the 61.8 back. So are we going to straight line there with the Fed tightening and the market not liking it? Or are we going to have a little relief rally first in the euro and a little relief in risk before that happens? That's an open question. I just have this fan line would be around the 78.6 levels, a shade under par, but this has been my target for a while. Similar in the pound. I don't think the pound has even retraced 38. I'm still looking for 114, but perhaps we get some type of Fed-induced bounce. The yen, we are diverging on the 4-hour time frame here, and it's tempting, but I look at the short term, and I don't think it's today. It's basically just sideways action. That doesn't look anything but corrective to me so far. But I want to bring something up about the yen. So the yen was able to squeak out new highs late last week. Here you go, new highs up here. Whereas the yuan, after taking its hit midweek, has not been able to retrace. A lot of banks are promoting to use the yuan for your carry trade instead of the yen. I'd be careful with that. It's a much thinner currency, much more managed currency than the yen. And something I'd be looking for would be, let's say the yen makes a new high, trades above this high. What was the high? 47.94. Say we head up to 48.5, 49, and the yuan does not make a new high, which I think is very possible, and we just get a failing rally. It's going to look like kind of a right shoulder here, and that would probably be my signal if we don't confirm the yen move with the yuan for a sale in both. So that's something I'm looking at. Canadian is lower. It's breaking some support here. I don't believe that the Canadian rally is over until we trade back over 138 and up towards a 140 level. That's when I think we'll be getting closer to that 108 level. So even though we're pulling back here, I'm not calling this a major top. I still think there's a shot for one move to the upside. Maybe it happens with risk off. One thing I did notice last week, there were at least one day where Euro was down sharply and the Aussie was actually higher on the day, which is giving me an inkling that when the dollar turns, the first currencies to make the turn may be the commodity currencies. So I'm not shorting it here, but I'm going to be paying pretty close attention to down here for a 3 drive on a fractal, 62.5, 63 down here. So you have 1, 2, 3, and within the third, you have 1, 2, and looking for one more. So your third drive at times becomes a fractal of the bigger pattern, and you get a 3 on the 3. So that's something else to be paying attention to. Gold and silver both recovered last week. There was a day when the miners were up, something fairly different. We haven't seen that for a while. But I still am not in the camp that this is the low in either gold or silver for the big move to the upside. I still think we're going to see lower numbers and 1880 taken out. Similar for silver. Silver had this little rectangle that we had a false breakout to the downside. Maybe we'll have a false breakout to the upside, but I think silver is going to have a very difficult time getting over 2360, 2350. That was an important hold area here. So I'm still not convinced that this is the low in silver and that will still trade a 20 handle. Copper is on the verge of a very important formation I got from my buddy Blake. It's this huge triangle in copper. And I think this is what's going to kind of give you a feel for when recessions in full is really starting to hit on the global stage, and that everything that China is doing is too little too late. And that would be a breakdown in copper under the 370 level. All right, so I want to talk about some of the stocks that are putting pressure on the market. Let's start with Microsoft. So this was one of the Magnificent Seven. You could see we failed a little bit above the 50% retracement level and headed lower. I think we could see 390 on it. Amazon put in a pretty negative 2-day pattern here. And I think you could sell rallies in Amazon longer term, 110 to 105 if we have a serious market problem, and some black swans in October is possible. NVIDIA has put in an island top. That's this little area right here. It gapped up and then it gapped down, never filled it. So you have longs marooned on NVIDIA island. I think 300 is viable in the coming weeks. Apple's up today. Still think that there's a problem with Apple, even though it's rallying today. And the bank stocks are under pressure. Pretty good break so far here. I know Mike put out that there was call buying happening in the banks and especially in Citi. So actually, I covered this. So I'm not sure if I'm going to recommit to it. And here you go. Here's the S&Ps. We're on the verge of re-entering the overthrow. We'll see if that happens this week. That's this line that was the overthrow. We negated it once, and then we got over it again, and maybe this will be the third time that we get back in the channel. And this is how, I'm looking at where the market could pull back to. The consensus narrative in the stock market is we have a 5 to 10% sell-off over the next several weeks or month, and then we melt up to new highs. So That type of consensus actually tells me, even though I think there'll be bounces from important levels underneath, and 4,200 to 3,900 are important, the 4,200 number is important. That makes me think that people are not prepared for what may happen. And what may happen is, break to 3,900, then a rally, and then, a very big break. I still think there's a possibility for 3,000 in the S&Ps. We'll take it a day at a time, but that's probably a target for the first quarter. So those are my takes. We have the Fed on Wednesday, so we'll see if it presents any selling opportunities. Gold's already coming off, and keep some powder dry for the miners. You had some decent bounces in the miners, but they're giving it back. Again, in GDX, I'm looking for it to take out this double bottom at 27 and trade down to a little bit under 25 in the coming weeks. And that's when I'm going to be buying the miners. So good luck today. Trade lightly in front of the Fed, and we'll react to what the Fed does. I'll be here Wednesday before the Fed. I'll be here with Mike tomorrow. And I have Tony Greer at TG Macro as our guest on Thursday. So we have a week filled with good content and some actionable ideas for you guys. I'll see you in the room. And don't just count your pips, count your blessings. Adios.